In terms of young investors, I'm more of the private equity guy, so I'm not going to talk about the whole public market. But yeah, there are some certain similarities when you come. So first of all is dealing with the FOMO attitude when it comes to young investors. Now, let's say people who are stepping into the market and they have wide array of options to invest in, and they have a lot of people telling a lot of stuff about the best investment opportunities, and how to multiply 5x 10x their money. And the thing that I find is the lack of understanding of these investment strategies before put in money. So as I was when I caught up with KS Rao sir in Delhi, we were having a similar interaction point. What is the biggest challenge that young investors find? It's kind of misunderstanding or misappropriation of these investment strategies that they see on social medias from fin influencers. That's
Hmm.
kind of the biggest troublesome point, because what many of the youngsters see is how to get quickly rich, or how to get quickly 10x their money, 5x their money. But it really doesn't
Hmm.
work that way. That understanding needs to be made in a very somebody who is influential, or who is in the field for a very long time. I guess when they say it, I guess that understanding becomes much more impactful to the younger generation. That's one thing.
Hmm.
But in terms of how Scope is trying to help over here, is more of the community that we are trying to provide to the younger investors. The problem is when younger investors come into this and they're alone in their journey, it's kind of tough to navigate these waters because there are a lot of things. But when you have a community that you can work with, that you can ask questions, that you don't mind making mistakes in front of, I guess it makes the journey a bit easier. It doesn't make it a whole lot easier, but it definitely makes it a bit easier. And especially Scope definitely tries to promote the long term perspective of investing. There is no short term gains. So the whole crypto thing that has happened in the past years, that has kind of made a wrong image about investing, that quick investing, short term gains, and multiplying your money. But we try to promote the long term investing perspective, and see how do you do risk management. Behavioral finance is also definitely, as case Rao sir said, behavioral finance is definitely one of the most important things that the young investors need to be educated about, and that's what we try to promote a lot.
Absolutely. As the quote goes, if you want to walk fast, you walk alone. If you want to walk far, you walk together. So the support of the community especially is essential, especially when the tendency for short-term thinking arises, right? Everyone wants to make short-term gains and then retire early, but there is a certain method to how you make money, and it's not always to take risk disproportionately. And the understanding of risk is key to ensure that you achieve your financial goals. On that note, Harsh, let me come to you to get your thoughts on how young professionals can strike a balance between risk and return in their investment strategies, and what role does mindful financial planning play in achieving this equilibrium?
Okay. Here, I would actually agree with what Mr. Rao said and what Sai said. Is that first, to achieve that risk reward ratio, we need to understand that trading is not the answer for 99% of the people. So, how I think that how youngsters, in my experience, perceive stock markets is that they get attracted to stock markets by the glamour and the glitter that surrounds it, right? That you will get rich in 3 months, and I completely agree with Sai that there are some people on the internet that show that I've got fancy cars, this, and a day is gone and
You've
you're
got
earning
quotes
lakhs a
as
day.
well, as they say, risk hai to ishq hai.
Ishq hai. Yes, 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 yes. So I think this is one part that definitely needs to improve, which I am sure it's actually improving. People are realizing the ground reality, and the main thing that everyone should take the risk that they can handle. A lot of people don't understand it. A lot of people are taking money on margin. They are taking money, lending money, and then going for fusion options, wherein you need big pockets for that. So for me, the answer lies same, that you invest in good quality companies and you invest long. This is how the biggest investors have made money in stock markets. This is how The most successful people have made money in stock markets, and this is the way it is actually should be. So you invest in small affordable amounts, you invest for long term, and you invest in good fundamentally strong businesses. And I think that is the thing that hits your risk equilibrium. How I design my portfolio, I'm a huge football fan, so I will have a ideal portfolio of 11 stocks, wherein I'll have four stocks that are very safe sectors, secular sectors like FMCG, like pharmaceuticals, that are consistent compounders. Then the strikers, the stocks that will be at the helm, one or two stocks, they will be a little more at the riskier end. Like if you talk about sectors like renewable energy, now a lot of companies have high debt in that specific area, but it is a sector that can give you extremely high returns in the near term future if things go accordingly. So this is how one should balance the entire portfolio. But yes, having consistent compounders in there and investing in an index is a must to have that risk reward equilibrium.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.